Mathew Lawrence. Good to see you, Matthew.
Hi, Owen. How are you?
Kind of okay. I should just warn everyone as well. I have plugged in an emergency battery into the camera because we were away, so we hadn't got a charged battery. If I just vanish at some point, you just carry on. You'll still be able to hear me, but I might just have to mess around with that. But that's fine. We'll just focus on you. So, Matthew, first of all, let's just to kind of get the discussion going. Let's just hear from Barry Gardiner, actually. Barry Gardiner is a Labour MP, and he had this to say in the House of Commons.
The UK has the lowest government tax take in the world for offshore oil and gas. Even with the temporary energy profits levy, the tax take will still be 6% lower than the global average, and the new investment allowance announced by the government will compensate companies 91 pence in every pound they spend on new oil and gas projects. So will the government look carefully at the fiscal regime and abolish the obscene subsidy regime which is distorting investment into outdated fossil fuels instead of new renewables which do not qualify for that investment allowance?
I'm just interested in your reaction to that, first of all.
Yeah, I think it's a very reasonable critique of a windfall tax that is really a windfall tax in name only. It will raise barely anything, as you say. It's only kicking in sort of now, so it sort of misses the extraordinary obscene profits that have been generated by sort of big oil over the last few months. It's got all these loopholes, so actually in some ways, the UK already has one of the most generous sort of subsidy regimes for oil and gas production in the North Sea. This kind of doubles down on that. And the amount it raises relative to the extraordinary sort of surges in profits we're seeing are just deeply inadequate. So I think combined with the inadequacy of support for renewables in the UK, I think that's it's spot on really.
Now, Matthew, let's just start these obscene profits. Now, some would say the apologists for the companies will say it's not our fault, circumstances being what they are. They'll talk about maybe the cost of production, all the rest of it going up. What's your response? Just to unpack, explain people clearly why are the household bills going up so much, and why are these profits suddenly surging at the same time? What's happening?
So there's no doubt there's been a sort of supply side shock. So sort of oil and gas production and the oil and gas markets, the price has risen, sort of the invasion of Ukraine is an obvious trigger, but there are sort of a whole series of, COVID related supply chain shocks as well. But I think the reason it's a crisis of profiteering, not just a crisis of rising sort of prices, is about, yes, prices are rising, but it's about who is bearing the cost there. Is it companies and so squeezes on their profit margins, or is it households? Is it ordinary people? And given we're facing this extraordinary social catastrophe now, and that's before prices, the sort of energy cap rises in the autumn, given we're facing this social catastrophe now, it's fairly clear alongside these extraordinary profits, and it's worth recapping them, the 5 largest oil and gas companies in the first 6 months of this year, including BP and Shell, have made almost $100 billion in underlying profits, which is triple their earnings in the first 6 months of last year. These are extraordinary numbers. What we're seeing is, as prices rise, the adjustment is all in the favor of the companies. It's all in the favor of growing their profit margins. And of course, it's not just in the energy market. We're seeing this across the economy. So we did some analysis with IPPR. In the UK, sort of corporate profits have gone up by roughly 34% on where they were pre-COVID, and yet we're seeing workers being asked to take another hit, and we're seeing real incomes being squeezed. So it's all about the crisis is rooted in this inequality, in the fact that sort of corporate power is allowing the extraction of vast sums and the upwards redistribution of our bills going directly into the pockets of shareholders, as you said.
Now, in terms of the war itself, is it fair to say this is kind of war profiteering? I say that because in World War I and World War II, this became a big issue. In fact, Harry Truman, who became president of the United States, made his name in the 1940s denouncing the greed. Specifically, these are military contractors were basically milking the government dry. So it's not the same, I get that. But isn't it the case that they are making money, in a sense, from the killing fields of eastern Ukraine?
Yeah, I think so. The firms are able to generate these extraordinary sort of windfall profits because they can yank up the cost, because supply is inelastic, it's sort of hard to expand, and there's been supply shocks because of sort of Russia kind of removing itself from the global oil and gas market because of sort of sanctions and the war in Ukraine, but demand remains relatively high. We still need oil and gas every day to because we've failed to get off quickly and move to renewables. We still need it to heat our homes, to power our industries, to sort of put in our cars, etc. And so it is very much these companies are taking advantage of this shock to charge high prices. And I think it's an interesting analogy. I mean, people like Isabella Weber, a German political economist who's done a lot of interesting work, have kind of drawn analogies with the post-Second War period, where actually there were a whole series of interventions in markets, whether it's price controls, whether it's new models of ownership, that were used to try and restrain surging profits during and after the war. And that actually constrained inflation. And yet what we're seeing now, today, is runaway inflation, rising profiteering, and sort of the concentration of power towards corporate giants like BP and Shell.
So a comeback from the oil companies, the energy companies, sorry, and their defenders are, look, we need a clean energy transition. And these companies need to invest in that transition. They need to invest in the new industries, new clean energy. And if you whack them with these new taxes, they're not going to invest, not going to be able to have the money to invest in those clean energy.
Yeah, I mean, it's a good line. It's unfortunately completely untrue. So I think if we look at that 100 billion that I was mentioning of the big five sort of oil giants, almost 50%, I think perhaps even more, has already been shoveled straight out the door to investors and to shareholders. And it's important to remember here that sort of shareholders, you'll often hear on BBC Radio 4, frankly, shareholders are little old granny who's getting her sort of pension and it's paying it. And of course, there are some sort of ordinary pensioners. But the typical sort of shareholder is disproportionately much wealthier, much whiter, much more male than the average person. And of course, this is about often sort of globally very wealthy investors, not just sort of typical pensioner. So I think this idea that they need the revenue to invest can be disproved by looking at their own actions. So for example, BP's share buybacks, which is a way of sort of funneling profits and sort of revenue to, or sort of cash to investors, was around $3.5 billion in the last quarter alone. That is more than they're planning to spend on their entire low carbon energy for the whole year, which is roughly about 2.5 billion. Exxon, which not necessarily a big UK company, but we did some analysis on what the oil and gas giants in the US were doing. Exxon spent more on its CEO's pay last year than it did on investment in the low carbon transition. And I think it's important to sort of really stress, and this is, I know Kat will do a great job on explaining sort of the rationale for public ownership, but this is, in some ways gets to the nub of it. We're saying, well, what we need to do is allow huge profits for these companies in the hope that they will invest in this sort of social goal that we want, a rapid and just transition to renewable and clean energy, rather than saying, why don't we have public ownership, public planning, and a rationalized transition where we invest based on social and environmental needs, not whether it's a profitable return or not.
I mean, it's striking as well, looking at your own research from Commonwealth, that since 2010, these big companies have handed nearly £200 billion to their shareholders. I mean, just a whopping amount of money, which obviously could have been used and invested in very different ways, from people's bills to, of course, the transition to clean energy. It's also striking. This was analysis done actually back in 2019. But the world's biggest oil and gas companies spend over £150 million a year lobbying politicians to halt, water down, and destroy policies required to tackle climate crisis. What they're basically doing isn't, they're greenwashing themselves. They know that public opinion has shifted to a position where there is a consensus that action drastically needs to be taken to save the planet from an existential threat, the climate emergency. That's down to the work of environmental campaigners. So the public expects that. So then BP and Shell have to clothe themselves in those garbs. But at the same time, they're actually lobbying, aren't they? They're using their might, their economic might, to try and stop the sort of action needed, whilst they also shovel vast sums of dividends to shareholders instead of investing in the transition.
Yeah, absolutely. I mean, so on greenwashing, I would be remiss not to mention my colleague Adrian Buller's new book, The Value of a Whale, which is a fantastic sort of expose and sort of deep dive into sort of green capitalism and sort of greenwashing. So I'd really recommend that to readers. But I mean, on that point, I think we've got to understand, in some ways we should think about, energy companies less as, well, what they do is produce energy and sell it. They are institutions for managing financial flows, and it just so happens that the way to manage financial flows to maximally reward their investors is through the sort of generation of energy. So, and why does that mean they're spending 150 million pounds lobbying, which is tiny really compared to how much they actually make? Well, they're doing it because the returns on fossil fuels still far outstrip renewables. So the reason they're not really investing in renewables is not just because they're sort of like, don't like wind farms, it's because you make much more money on fossil fuels relative to renewables, which kind of makes sense to me because renewables are they're sort of a flow, as Andreas Malm talks about in his book Fossil Capital, whereas fossil fuels are a stock. They're like easy to concentrate, easy to privatize, easy to control, and so they generate roughly on average like 2 times as much a typical return for an investor fossil fuel project relative to renewables. So of course you're going to sort of try and stop and delay the transition, because if you are mainly based, if your institution as a company, a for-profit corporation, is about maximizing returns, then other social goals, if they allied with the goal of maximizing profits, you might do that. But broadly, your interest is in maximizing profits. It's more profitable at the moment to extract, generate, and sell fossil fuel-based energy than renewables, and therefore these companies will be doing as much as they can to sort of slow down the transition, to delay it, to politically lobby to sustain it. And BP and Shell, you mentioned, but I mean, when you look at what Exxon and Chevron and the American giants do, it's completely off the charts. So you're facing this really deeply embedded political opposition, but that is rooted in the sort of rationality of what capitalism is about. It's about sort of accumulation and expansion, and extraction and sale of fossil fuels has been core to that for over 100 years now.
It's also striking. Big Energy's thrown £1 million at the Tories since the election, and that's not just, they're not just throwing that money around whimsically, are they? I mean, Rishi Sunak handed them 90% tax breaks, supposedly. I mean, that's for new investment in fossil fuels, isn't it?
Well, yeah, exactly. And I think Liz Truss is an ex-Shell employee, although it does look like I'm sort of like to kind of see my shirt. It looks like I'm sort of actually being sponsored by Shell today, which I can assure you I'm not. But yeah, I mean, I think there is, there's a Conservative Party. They obviously have privatised much of the UK's sort of, BP was of course publicly owned. They've privatised the sort of generation, the transmission, the national grid. I mean, I think one thing to just sort of step back, which I think problematizes a little bit some of these numbers and these big figures for people on the left or progressives, is that these are extreme numbers. Obviously, it's sort of the level of profitability, but it is important to put in context that much of the wealth is made globally and extracted and expropriated from the land and resources of very often people in the global south, very often who live in sort of really sort of what's called sacrifice zones, sacrificed sort of interest and profitability of these companies. And so I think, in some ways, we should all, yes, we should be using and thinking about how we should squeeze that profit to support households in the UK, but we should also be thinking about these companies, BP and Shell and others, are sort of deeply rooted in histories of empire. Kojo Karam's brilliant new book explores that, and both historic but sort of ongoing processes of unequal exchange in the global economy. And so when we talk about these big figures, I think we also should be thinking about not just the squeeze of in households in the UK, which is just extraordinarily intense and social catastrophe, but also the ongoing social catastrophe that is occurring in the global south, and can we repair some of those harms in thinking through how to reimagine oil and gas companies.
Now, just I'm going to talk to Kat shortly just about the issue of public ownership and how we do that. But it is striking. I mean, let me take obviously in France, you've got EDF, which was state-owned largely. Actually, Emmanuel Macron, no comrade, I think it's fair to say. But he's actually bringing in the remaining kind of privately owned part back under government control. One thing I do want to say is actually interesting. You mentioned before I mentioned Norway. Sorry to flit around. You did mention pensions. And I think it's quite important to mention that just a bit more, because the argument, again, of the big energy companies is if you whack us with windfall taxes, that will hit pensioners. But again, according to your research, which was given pride of place in the Guardian newspaper, which we love to see, only 0.2% of BP and Shell stocks are owned by pension funds. So actually it's completely irrelevant, isn't it? It's interesting Norway, isn't it? Because I don't think anyone could call Norway an economic basket case. And they've got a permanent windfall tax. And so they've got their corporation tax, but on top of that, a 56%. So that means for every £100 they collect from barrels in the North Sea, Britain collects just £8. So, Norway really does show this is... I don't think anyone would look at Norway and think, that's a...
Yeah, exactly. I think it's obviously one of the great historical turning points in the sort of 70s. Tony Benn and others were arguing for a sort of North Sea sovereign wealth fund. You had sort of a publicly owned company was exploring the North Sea for exploration for generation, and there were plans to exactly create the type of sort of socialized collective wealth fund that could be used to then support pensions or other social investments over time. And of course, we took a very different road, which is the privatization of public assets in the energy system, using that to pay for Nigel Lawson's tax cuts. I keep mentioning books here, but a really good book here is a book called, which I've now forgotten, but I think it's Britannia, not Britannia Unchained, but a book by a couple of ex-Guardian journalists, Terry McAllister, I think, and one of his colleagues, called Britannia. There's some sort of oil Britannia, something like that, but it basically traces the history of that decision to privatize and bring in American capital to develop the North Sea and some social consequences. I mean, I just think two other things. I mean, one on the pensions, I think that's an important point, because I think the two typical defenses you get is one, well, if you sort of, if you don't let us make mega profits, we won't invest in renewables. But then that's really points to, well, why on earth are we sort of leaving our future hostage to the goodwill of the profitability decision making and investment decisions of private corporations? And then two, their second fallback is, well, if you squeeze us, pensioners will be hurt. And I think as you say, pension funds are now so diversified that the sort of hit to a typical pensioner is low, even if you have a windfall tax. And then two, the typical pensioner is not your ordinary person; it's often much wealthier, as I say. So it doesn't really stack up. And I think there's a sort of third point there of well, again, we shouldn't let dignity and security in retirement be reliant on the whims of financial markets. We should provide that through public pension systems and sort of decommodify security in old age and make it less reliant on the profitability or otherwise of financial corporations. And then I think the third thing, just on Kat will go through it, I'm sure, in depth, but on public ownership, I think the key thing is, what do we want with an energy system? And obviously there is a slight distinction between firms like BP and Shell, which kind of integrated multinationals, versus companies like National Grid, which do transmission, the sort of big five, which supply energy, generators, etc., all of which is sort of very rent extractive. But I think, what do we want? If we think of it holistically, we want three things. We want security of supply, so we want the lights to not go on, and we don't want our money to be going to funds of sort of authoritarian regimes, which then sort of spend that money on sort of wars in Yemen or whatever it might be. We want security. We want affordability. So people are being there's that. You were a historian, so you sort of crucifying mankind on a cross of gold around the gold standard. We're literally crucifying people on the cross of profits right now, and we can rebalance that. Prices have gone up, but we can rebalance that in a way that's much more affordable. We can reform the social security system to sort of ease that as well. And of course, the third thing we want is a rapid and fair and clean transition to renewable power. And in all of those things, we should be investing and making decisions and planning not based on the sort of profitability investment decisions, but those three goals, and do we maximize them? And so actually, when we talk about what's pragmatic, what's rational, it's actually irrational to leave the meeting of those three goals to companies whose goals are not in meeting those. Their goals are in maximizing returns, which is why we've seen these 100 billion in the last 6 months. And so I think ultimately, there really is a tension, a sort of existential tension to a degree at a planetary level, between the basic institutional design of the for-profit corporation, as exemplified by BP, Shell, Exxon, and others, and the sort of basic needs of ordinary people and the planet. And I think that tension has been hugely exacerbated by this crisis, but it remains fundamental to the institutional design of how we organize the energy system. Is it something that's based on literal public power and organized for the public good, or is it something that ultimately is about sort of profit margins and return profiles of very wealthy investors? And I think that's sort of when we step back, that's the big question facing us. And I think we sort of need to sort of grip it, because energy is the basis of all politics in a way. And if we can sort of democratize energy, democratize ownership of the system, I think we can begin to emerge out of this crisis with a very different sort of trajectory.
Matthew, a legend. Really appreciate that. What a masterclass as ever. Do obviously look up Mathew Lawrence, Danton's Head on
Twitter.
Twitter.
It's another history reference, but I also want to keep a bit of anonymity.
We love our history. But also do check out Commonwealth's work. It's common For those listening on the podcast, it's common, space, then wealth. But look up their work on a whole range of issues. They're invaluable. I often quote them. In fact, my column this week relies extensively on Mathew and Commonwealth's research. So do obviously check them out and support them in every way you can. Mathew, it's a real honour. I know you've got to go up for dinner, but at such short notice, we only got Mathew at very, very short notice, and our next guest. Lots of love, and I'll see you soon.